Asha, good morning. And lots to watch out for because, the weekend's gone by. We've had a whole host of commentary, the conclusion of the G20 summit, and so much to talk about. First, let's take a look at what the global equity markets have done. US sharp recovery from Thursday's trade, at least in Friday. All three indices did well, about a 1% gain across the board on Friday. But despite that, the US markets ended with cuts on a weekly basis, with the S&P down 2%, Nasdaq down about 3%, and Dow was also down 2% on a week-to-date basis. A large reason of this fall that we've seen in the weekly action on the US market has been because of tech stocks and the valuation concerns around some AI stocks. So if you take a look at some of these big names, especially the Mag 7 names, from their 52-week high, you have names like Microsoft and Amazon that have fallen 15%. Nvidia has fallen 16% from its 52-week high, and Meta has fallen the most, a 25% cut, along with some other stocks that have fallen from their 52-week high. So that tech bubble that everybody was talking about on the street seems to have finally burst, or at least in the process of doing so, because you have some massive double-digit cuts coming in on all of these tech stocks from their 52-week high. Moving away from that, let's talk about Europe. Europe did pretty okay. CAC was flat, but FTSE and DAX did pretty okay for themselves. Asia this morning, ASX 200 is up 1%. Good move from Australia today. Nikkei is closed today, remember, but that cut that we saw of 2.5% was on Friday. So massive cut, and that attention around their new economic stimulus package that continued to prevail on the street on Friday. Hang Seng is up 1%, Shanghai is down 0.2%, but mixed day of trade coming in from Asia this morning. Other than that, gold continues to be around that 4,100 mark, very close to that dollar per ounce. You have crude oil around 61.6 and dollar index around 100.2, managing above that 100 mark. But let's refocus and talk about the global commentary that we've seen coming in over the weekend. First, let's talk about John Williams, New York Fed president, and the reason why, part of the reason why rather, that the US market did very well is on the back of some of his comments. And the US futures are also doing very well right now, because he did say that he views monetary policy as being moderately restrictive, but he is still seeing some room for policy adjustment and one more rate cut in December. This has turned the entire tide from all the comments that we've heard from other Fed officials on Friday. So that's a welcome surprise from the Fed official. Moving away from that, Scott Bessent, U.S. Treasury Secretary, says that the 43-day government shutdown has caused pressure on the U.S. Yes, but he does not see any sign of inflation for the U.S. economy. He is very optimistic on 2026, on very strong non-inflationary growth economy for the U.S. So positive comments from there as well. Lastly, on the sidelines of the G20 summit, you've had the comments coming in from Canada Prime Minister Mark Carney. Now remember, Canadian Prime Minister and PM Modi have agreed to launch negotiations on the new Canada-India trade deal, and Carney said that this trade deal could double Canada-India trade to $70 billion, and India is the world's 5th largest economy, and that means big new opportunities for Canadian workers and businesses. So that's all the positive takeaways from the G20 summit, as well as everything that happened in the US economy and the global markets. Back to you.